Imagine it's a Friday afternoon. The market's close. You go home, have dinner with your family, and go to sleep. Everything feels normal. But while you sleep, a meeting is taking place. Not in a public hearing, but in a closed room at the Treasury Department. A document is signed. By Monday morning, the world has changed. You log into your bank account. Your dollars are still there, but the price of gold has jumped from $2,500 to $25,000 overnight. The price of Bitcoin has gap traded to $150,000. Suddenly, your safe savings account has lost 90% of its purchasing power, not because the number went down, but because the standard of value was reset upwards. This sounds like science fiction. It sounds like a doom and gloom conspiracy, but I'm here to tell you, this has happened before. It happened in 1933 under Executive Order 6102. It happened in 1971 when Nixon closed the gold window. And right now, the mathematical conditions for it to happen again are not just possible, they are necessary. The government has a $35 trillion problem. They have two choices. Option A, let the entire system collapse. Option B, reprice the collateral and inflate the debt away. They will choose option B. They always choose option B. Today, on Wealth Architect, we are going to leak the blueprint. We are going to open the Gold Revaluation Account books. We are going to discuss the Bitcoin strategic reserve. And most importantly, I am going to give you the sovereign barbell strategy so that when that Friday night comes, you are the one they are transferring the wealth to. Welcome back. I'm Ben. We don't predict the future here. We prepare for the inevitable. To understand the reset, you have to understand the trap. Most people think inflation is bad policy or accidental. They think the Fed is trying to fight inflation and failing. This is the biggest lie in finance. The government needs inflation. When a government owes $35 trillion and the interest on that debt is over $1 trillion a year more than we spend on the military, they are insolvent. They cannot pay it back in real value, so they must pay it back in fake value. They must dilute the currency so they can pay back old debts with cheaper dollars. This is called financial repression. It is a hidden tax on savers. But here is the catch. They can't just print money forever, or they get hyperinflation, the Weimar Republic scenario. If the dollar collapses, they lose power. So they are stuck. If they stop printing, the debt collapses the economy. If they keep printing, the currency collapses. This is the debt-death spiral. We are currently at 120% debt to GDP. Historically, once a nation crosses 130%, there is almost zero probability of recovery without a default or restructuring. So, what is the third door? The third door is to reprice the balance sheet. Instead of printing more paper dollars, which causes inflation, they simply declare that the assets backing the dollars are worth more. This brings us to the nuclear option that has been sitting on the books for 80 years. Let's get technical. I want to show you something that 99% of financial advisors don't even know exists. It's called the Gold Revaluation Account, GRA. If you look at the Fed's balance sheet, they list their gold holdings. The US Treasury holds roughly 161 million ounces of gold. It is the largest stockpile in the world. But here is the secret. They value it at $40.22 per ounce. That is the statutory price set in 1973. The market price today is over $2,500. That means the government is sitting on a mountain of unrealized equity at $40 Oz. That gold is worth about $11 billion. A rounding error. At $2,500 Oz, it's worth about $650 billion. But what if they change the price again? The 1933 precedent. In 1933, Roosevelt confiscated gold at $20.67. Then, he immediately repriced it to $35. He effectively devalued the dollar by 40% overnight against gold. This created an instant accounting profit for the Treasury, which they used to print money and stimulate the economy without technically borrowing it. The 2025 scenario, fast forward to today, the debt is $35 trillion. If the Treasury Secretary and the Fed Chair meet on a Sunday and decide to revalue gold to $50, 0 an ounce ***, suddenly, the U.S. Treasury has $13 trillion in new equity on its balance sheet. They can issue gold certificates against this new value, hand them to the Fed, and the Fed cancels $13 trillion of government debt. Poof. The debt-to-GDP ratio drops from 120% to 70%. The crisis is solved. The consequence: the dollar is still the global reserve currency, but it has been massively devalued against real assets. If you held gold, your purchasing power stayed the same. The price went up 20x to match the devaluation. If you held cash or bonds, your purchasing power just got cut in half. This is why central banks around the world, China, Poland, Singapore, are buying gold at record paces. They aren't buying it for jewelry. They are front-running the repricing. Now, you might be asking, if gold is the answer, why are you talking about Bitcoin? Because we are in the digital age. Gold has problems. It is heavy. It is slow. It is hard to verify. If I send $1 billion of gold to China, it takes months and an army to secure it. Enter Bitcoin. For the last 10 years, the government tried to fight Bitcoin. They realized they can't kill it. Now, game theory dictates they must join it. Think of it like a geopolitical poker game. There are only 21 million Bitcoin. They can never be diluted. If China starts accumulating Bitcoin as a reserve asset, which they are doing through Hong Kong, and the US doesn't, the US loses financial dominance. There is a bill currently proposed, the Bitcoin Strategic Reserve Bill, championed by Senator Lummis and others. The plan: the US government holds the 200,000 plus Bitcoin it has seized from criminals and actively buys more to hold roughly 5% of the supply. Why would they do this? The software thesis. Major Jason Lowry at the US Space Force argues that Bitcoin is not just money, it is a cyber defense protocol. By securing the network with energy proof of work, you secure your digital property rights. Asymmetric upside. If the US government creates a floor for Bitcoin, the price goes vertical. If Bitcoin goes to $1 million or $5 million a coin, the US government's stash becomes worth trillions. It is the only asset that can grow fast enough to outpace the debt. The repricing dynamic. If gold is the defensive repricing safety, Bitcoin is the offensive repricing growth. When the fiat system cracks, capital flees to safety. Old capital boomers, central banks flows to gold. New capital tech, millennials, institutions flows to Bitcoin. We are already seeing this. BlackRock, the world's largest asset manager, is now the world's largest holder of Bitcoin. Do you think Larry Fink is stupid? Or do you think he knows the repricing is coming? Before I give you the strategy, I have to warn you about the trap. The government knows the dollar is failing. They have a solution for their problem, but it's a nightmare for your freedom. Central bank digital currencies, CBDCs. While they accumulate gold and Bitcoin for themselves, they want to push you into a digital dollar. Why? Because a CBDC is programmable money. They can set an expiration date on your savings to force you to spend negative interest rates. They can block you from buying certain items. Carbon footprint limits. They can freeze your assets instantly if you dissent. This is the fork in the road. Path A, the state money CBDC. Total control. Infinite supply. Path B, the sovereign money gold and Bitcoin. No control. Finite supply. The Great Reset is the battle between these two paths. If you stay in the banking system 100%, you will be herded into Path A. You must build your exit to Path B before the gate closes. So, how do we architect this? How do we position ourselves? We use the sovereign barbell strategy. Most investors are medium risk. They hold a 60-40 portfolio of stocks and bonds. In a reset, the middle gets slaughtered. Bonds get inflated away. Stocks crash in real terms. The barbell means we are hyper-conservative on one side and hyper-aggressive on the other. Bucket 1, the anchor 10 to 20% of net worth asset. Physical gold and maybe silver. Purpose, insurance. Execution, do not buy paper gold GLD ETFs that you can't redeem. Buy physical bullion coins, eagles, maples, hold it outside the banking system. If you can't hold it, use a vaulted service in a neutral jurisdiction like Singapore or Switzerland, e.g. Bullion start closing parenthesis. This money is not for profit. It is to ensure you never go to zero. Bucket 2, the rocket 5 to 10% of net worth asset. Bitcoin. Purpose, asymmetric growth. Execution, do not buy crypto altcoins, meme coins. That is gambling. Buy Bitcoin. Crucial, you must self-custody. Not your keys, not your coins. If you leave it on an exchange, Coinbase, and the government issues an executive order 6,100 for Bitcoin, the exchange will hand it over. Learn to use a hardware wallet, Trezor, Ledger, Cold Card. That is your digital vault. Bucket 3, the engine 70 to 80% of net worth asset, cash flow skills and productive businesses. Purpose, funding, execution. This is what we talk about every week. You need a business, a side hustle, or a high-income skill that generates fiat cash flow. You use this engine to mine fiat currency while it still has value, and you immediately convert the surplus into the barbell gold and Bitcoin. You are using the dying system to fund your entry into the new system. The trap to avoid: do not go 100% into gold, Bitcoin. You still need cash to pay rent. You still need liquidity. The architect strikes the balance. I know what some of you are thinking. Ben, this sounds extreme. America is fine. The dollar is strong. This is called normalcy bias. It is the psychological refusal to believe that things can change drastically, simply because they haven't changed yet. The people in Rome thought Rome was eternal, until the Visigoths were at the gates. The people in Weimar Germany thought the mark was safe, until they were using wheelbarrows of cash to buy bread. History is a series of resets. The timeline between them is usually 80 to 100 years. The last major reset was 1940 for Bretton Woods. Before that, 1933. Before that, 1913. We are due. The leaked plan isn't a secret document. It is simply the recognition that the math doesn't lie. The government is preparing. The banks are preparing. The billionaires are preparing. If you are sitting there waiting for CNN to tell you to buy gold, you are going to be the exit liquidity for the people who acted today. I want to leave you with this thought. A reset is not the end of the world. It is simply a transfer of wealth. Wealth is never destroyed. It merely changes hands. It moves from the ignorant to the informed. It moves from the holder of liabilities, currency, to the holder of assets, gold, Bitcoin. It moves from the passive to the active. You have the blueprint. I have shown you the math. I have shown you the historical precedent. I have given you the barbell strategy. The question is not will it happen. The question is where will you be standing when the music stops? Don't be a victim of the reset. Be the architect of it. This is a heavy topic, and I know it raises a lot of questions. I want to start a serious debate in the comments. The question: if the US government formally announces a Bitcoin strategic reserve, what do you think happens to the price within 24 hours? And more importantly, do you trust the government to hold Bitcoin, or will they try to control it? Type trust or nitrogen monoxide trust and tell me why. I will be in the comments for the first 2 hours debating this with you. And listen, if you don't have Bucket 3, the cash flow engine, built yet, you have no fuel for this strategy. You need to watch my video on the anti-hustle blueprint next. It teaches you how to generate the cash you need to buy your freedom. Click that video right here. Subscribe if you want to survive the reset. I'll see you on the other side.